All right, good morning, Coffee Talk Live. How's everybody doing? We're on day, 28 or something of a quarantine where we're all supposed to be in our houses, social distancing. But today I have Holly Ford and Jason Tropf from Cannabis 10X. They're both business brokers. They're also experts in franchising. And, I wanted to bring them on today and talk about like the current climate, what's going on with not only small businesses, but, also franchises, because, when we think of franchising, we think, Chick-fil-A, the big master, like multi-state giant. But, there's a lot of franchises that are small, that are maybe 4 or 5 units, or,
Right.
They're just growing and they're getting started and they're being affected right now. So, I want to hear from you guys, on what you're seeing and, what kind of opportunities. Holly, why don't you tell us a little bit about your background first?
Yeah, hi. Thanks for having us, Tom. It's a very rainy day. We had a tornado last night, so that's kind of exciting. Background is I was in the franchising world for several years, running and directing the sales of a national franchise, 150, 60 locations it ended up at. I loved it. It was a great opportunity. But then shortly thereafter, I had an opportunity to go into just the resale space. We had done a lot with these franchises. We'd increased their numbers exponentially on their sale. They bought it for $39,000. We had one that sold for $1.95 million. So it was after having it for just a few years. So we felt like it was a good opportunity to really focus on resales of franchises. So I was going to partner with a couple of different groups, I ended up starting my own brokerage. So I started Zarian firm, which is an international business brokerage. Had fantastic success with that. I love the business brokerage space. I like franchising people's businesses. I like selling them. I like selling businesses, working on exit strategies. But like any entrepreneur, and I'm going to say this to you, Tom, because this is right back at you, we do get bored. and so, looking for other opportunities or looking for expansion for Zarian. And I met Jason at a franchise broker conference, I believe Cancun, Cuba somewhere. And we got to talking, and he was telling me all about his place in the cannabis area and, what he'd done and the influence he had had. And it seemed like a good opportunity to maybe discuss further. So we ended up partnering, and he's a partner with Zarian, and then I'm a partner with Cannabis 10X. And that's the background for me, sort of.
Well, and Jason, I know you have an interesting background before Cannabis 10X, but, tell us, what is Cannabis 10X?
Yes, it's mergers and acquisitions, a business brokerage with a specialty or focus in franchising as a growth model. So that was where I came from. Also, our family business was a franchise since we were kids. Our dad started a franchise concept, and me and my brother worked in it. I grew it to over 100 plus locations, and then made an exit to a larger brand who folded it into 700 to 800 locations at this point. And so we went from there into working with a lot of brands in franchising for franchise consulting, and worked with about 250 different brands, and some of them are emerging brands. So in the emerging space, I started to see some of the fastest growth that I've ever seen in franchising, and that was CBD. And there's a very limited amount of options, right? So if you go into any other industry and look for franchises, there's thousands of options. It's just flooded with concepts. But when you get into the space, it's so small that franchising as a service became something we needed to put some serious effort into, because it was, you got one option, and if you can't, if you don't like that option, you just stop. So we started working with a lot of brands. I mean, along the way there, I was also writing for Forbes, and started interviewing some of the largest players in the space. So there's multi-state operators, and then there's Canada. So we started working with Canada. We set up a lot of different things that are necessary across the supply chain. So it's not as simple as say a business concept that you might see in, work from home type of a concept, or a Baskin Robbins, where everything in the industry is pretty standard and banking is standard and things that you would just expect in business aren't there. So I started getting really embedded in the infrastructure to set that up, because when you get in the United States, crossing state lines is every state acts as though it's its own country. So they have their own regulations, they have their own set of laws. Sometimes it's medically legal, sometimes it's recreationally legal, and sometimes it's completely illegal and federally illegal as a Schedule I narcotic, which is the most dangerous drug category that they have, which is a complete farce. I don't understand how that ever happened. I do understand how that happened. We just won't go there. So anyway, suffice it to say, we started talking to a lot of the larger brands and doing capital raises for some of them for seed rounds, Series A, Series B, and getting into the infrastructure again from multiple countries. So Canada, started working with the first franchise up there in Canada that was Spiritleaf, and they have over 100 territories sold in the first year because they're federally legal. So it's really easy to grow. And then we started talking to cultivators we have the largest cultivator in Canada on board. We have the largest cultivator in Africa who distributes to Europe, who has ties in Jamaica, and then some of the more Western states that are more established and more free markets, basically. Which is funny to say when you're in the United States, that we have a free market and a not free market in some industries. So I'd say it's, when people throw the word around Wild West, this one really is way more like that than you would, hear that in any other industry. It's actually not the same. It's not the same country if you go from, Colorado and just cross the state line. So the Western states are much further ahead. They're a decade in. So we started franchising people concepts. And it turns out you want to be vertically integrated. So you kind of need to control your supply chain in some states legally. Others you don't have to, but your costs can get out of control, or your taxes can get out of control. So controlling your supply chain becomes very important. So long story short, we started working with a lot of different brand owners and setting them up so that they're vertically integrated, getting the branding right, getting the systems and procedures and operations manuals set up, and really getting it to a point where you can come in the way that you would in a Baskin Robbins with, say, $250,000 and get, a lot of financing help with some partnerships that we've set up, so you can get 100% financed greenhouse, so you have your growth set up, but you don't have to start out, being fully funded like a corporate store would, maybe $100 million fund in the background. That's also, when we were doing capital raises, one of the things that we noticed was that when you're franchising, the growth, the funding for your growth comes from your franchisees, and the funding for your growth in a capital raise comes from one single raise where you give away a piece of equity. So you give away, let's say 10, 20, 30%, and that gets you one more location. And then you do that again, and you do that again, and you can do that so many times before a lot of those companies end up either stuck, or they can't grow quite as fast anymore because it just doesn't make any more sense to raise more.
You're saying something very interesting. I just want to stop you right there, just for the people that are watching that, may not know all these technical things. Let's take a look at, what's happening, right here in the market in cannabis right now. So a capital raise, or, even a public offering with a vertical company like Trulieve, for instance, that's opening up multiple locations. So, let's compare and let's look at, because one of the things that I heard you say was, with all these different state laws, country laws, that on top of franchising laws and on top of capital raise laws, there's tons of complexity and curveballs that are out there. So Trulieve would be an example of a capital raise expansion company. Can you give us an example of a franchise raise capital company, maybe not here in Florida, but on the West Coast, that is actually doing it successfully?
Sure. Yeah. So I'll give you 3 examples. There's the first one in Canada, that's Spiritleaf. and they've, funded by selling territories, obviously. There's in the first one that came out that we were introduced to in that franchise network that me and Holly met in. They were originally called One Cannabis, and changed their name recently, rebranded to Unity Road, and we worked closely with them. I consider Justin Livingston over there in the franchising division a friend of mine, and so then that was the only option in the United States. So we started brokering sales for cannabis dispensaries, those cannabis businesses, basically, not only retail, but cultivation processors, manufacturing plants. So so over there in Colorado, there's Unity Road, and then so we have another one that we're franchising from Colorado as well, called Denver Dispensary. There's going to be they're in the middle of a rebranding process. That name will be updated, but right now it can be found as Denver Dispensary, and is that what you're asking? Did I go off your?
Yeah, no, I think so. And Holly, maybe you can also, maybe clarify. So I guess, so with somebody like Denver Dispensary, so if they're going to grow, how they rely on it is a new franchisee, which is an entrepreneur or a potential business investor, would invest in buying a franchise location for that type of a thing with a dispensary. And that's what would fund their growth as compared to, some of these other companies that are just continually raising capital to open a new location, so to speak.
Right. Yeah, no, you nailed it. That's exactly correct, Tom. So a franchise has the opportunity to receive a franchise fee, and then they also receive royalties. So when a person wants to maybe invest in their company, they're going to pay for an amount, and they're going to build out a store, and maybe they're going to build 2 or 3 or 4, and then they're out of money, and hopefully their revenue is strong enough to sustain things and maybe grow a little bit more. But there comes a point where that well starts to dry up unless they're really pushing the envelope up there. So we watch these companies with capital raise after capital raise. We work with them directly. So we see this happening, and we make some suggestions, and should they jump down this path, they're going to find that they'll be able to grow exponentially, not just the growth of onesie twosie locations, doing it in a way that's very quick and is really strong on their branding. So you'll see a company like Denver Dispensary, fantastic owner, he has several locations. They are rebranding. They were wise enough to say, look, we can do capital raises, we can grow. And we signed them for capital raise. We were going to work with them to get them some money to build another facility, And then we said, hey, you've got an amazing concept here. So the concept has to be profitable, replicable, right? And it has to have something in it that makes it differentiated, something that is a catch or a hook line, right? Because then the franchisees want to buy it. So we did that with Denver, and he will now likely, we like a slow growth because we like it strong and steady, but he'll likely go 12, 24, 48 franchises year over year if he does it responsibly. And that business in 3 to 5 years, he's going to have over 100 locations, each of those locations doing $1 million to $2 million in top line revenue. He's going to have royalties coming to him. He's going to have marketing fees coming to him, which will sustain his national branding nationwide and probably internationally once this thing opens up, which we think in those 5 years it will. It has a second benefit, though, is that it is now he has such a strong market share that as institutional money opens up their pockets more than they are, and things come in and it starts to flow and investors start looking for those great opportunities, he can come in and say, I'm the only dispensary out there with 100, working locations. We've got a combined, revenue of all the locations of, $250 million. That's prime for an investment or an exit strategy, if you will, at that point.
So basically, this is just another form of funding and fundraising by franchising your business. And, people can keep their company private this way, correct? And then investors can actually invest in individual franchises or individual locations, or can they invest in the the overall overarching company, or me if I was
Right. There's a couple ways to do it. That's a great question on where they invest. They can invest in the overall franchise and receive, however they work it out. It could be a little bit of equity. It could be a return, a high return. It could be 0.5% of royalties. So for $500,000, you get 0.5% of these top line royalties. That amount of money that you invest, 500,000 in 5 years, looks like $6 million. That's a nice little return on your investment. And they can invest in an individual store, right? Correct. But remember this though, the buyer, the franchisee, he pays for his build out. He pays for everything involved. And don't be afraid, buyers, because it's not expensive. We put it in a box so that it's replicable and you're profitable. That's how we work our franchises. First is we make sure that our buyers are profitable, then we work those numbers backwards. So there's so many opportunities in this space.
So Jason, I'm guessing, and I'm going to bring up just two franchises that I know of in the CBD space that have, before, when I was told the numbers of how many locations they had, I blinked my eyes. I was like, are you kidding me? This has happened over the last 2 to 3 years. American Shaman and I think your CBD store, I believe one has 300 locations and the other has 600 locations. And, it's like in 2 to 3 years, they grew to that many locations. And I never even saw them at an event raising capital. And I've been at every capital raising event. And I've been at all these different things. So it blew my mind that somebody can enter the space as a CBD store. And then overnight, I say overnight because 2 years is overnight in any industry, have 300 or 400 locations and being doing the revenue they are. Tell us a little bit about that, Jason.
Yeah, sure. So CBD American Shaman, we spoke a lot with the founder there, and they sold about 600 locations in their first year. So a lot of when you see 300 to 400 open, a lot of time when you buy a franchise territory, it makes a lot of sense financially to buy a 3-pack or a 5-pack or sometimes a 10-pack to get the territory discount and then open them on the schedule. So if you see, and same thing with your CBD store, they're doing 500 territories a year in sales. So
wow.
It's incredibly fast growth. That's what I was referring to. And so to give anyone else who's watching some sort of a comparable to that, we were watching hundreds of brands growth, and as Holly mentioned, a responsible growth rate is probably a dozen units in your first year. If you haven't owned that many before, having hundreds all of a sudden, you're not going to know what to do. So I think there's challenges presented with that speed of growth, but it's still very impressive, and who knows how it's going to end up. But you have all of those locations that are opening now are each one of the owners is now in need of some sort of a support, guidance. What do I do now? How do I get customers? And especially in this environment right now with COVID, what I'm noticing here, and you can kind of verify this yourself if you use Google Trends and search results, you can see what the public kind of is thinking about if you mess around on Google Trends. And you can see like inverse relationships in searches when COVID starts to happen. And so some things that I saw go down were searches for CBD, and for marijuana, it went the other direction, it went up. So our franchisor in Denver dispensary had the highest sales ever in a day when the lockdown was announced. And so using that as sort of if you're in an industry that's getting crushed by that whole thing, let's say spas, I think people who are in, they say they own 5 or 10 locations in spas. Who knows what's going to come back. As far as retail goes, I'm certain many will not come back. So we are a business brokerage, and in Zarian, I think what makes a lot of sense for some of those owners is to eliminate the bottom third, let us sell those for you, and transition into what I sort of, tongue in cheek call a pandemic resistant industry. the growth has actually gone up. So there was a spike when lockdown was announced in sales. It went way up. That fell a little bit because people just kind of stocked up, kind of like toilet paper. And then, but when it came back down, it didn't go back down to normal. It went to above normal. So it was like, it was like here, way up, and then a little down, and then, continued on an upward trend. So to transition into it, buy a territory and get everything handed to you, wholesale costs, with good margins on it that are guaranteed, and it's as important to the owner for you to succeed as it is to you as a franchisee.
Yeah, because there's so many complex. I don't mean to cut you off, but you're absolutely right. There's so many complexities to running a business. Even hamburger places. They make just a certain menu. With franchises, especially in the CBD world, there's so many different things and complexities that comes into running just an individual store. I know my wife does it, down here in Tampa. To grow and duplicate that, at that high level, it takes a lot of back end support for those franchisors, so to speak. So are you seeing that's where the capital is needed to really build that backbone, because the growth is so dynamic and so quick on its own organically?
I'm not sure. So I think that what I saw happen in some of the capital raises, like there's some incredibly good brands that are raising capital. Don't get me wrong. I think that some of the best ones. I think I'm a big fan of Planet 13 when they have a superstore, in Vegas. I mean, we actually hosted the Pitch Fest that they were where we were helping them raise their current round that they're going after, and saw their whole expansion strategy, and it's the most impressive store. They have 10% of the market in Vegas in one single store. But then again, their entire customer base pretty much dried up because, tourism is gone. It's Vegas. People don't go inside anymore. So, I mean, I don't know what's going to happen when you're, there's a bottleneck there. But there's another brand with capital raising that is MedMen. They raised $250 million. That's like, they were the biggest player in the field, and their growth. And this happened with a lot of the capital raises. The projections were off. So, the money that they were spending for the growth rate that they were sustaining was coming from the capital they were raising, and not from the return, which is backwards. When you're in franchising, it's the exact opposite. You don't spend money you don't have, so you get it. So anyway, the 250 million ran out, and they started downward trending, and they started doing massive layoffs. A lot of the companies that were raising capital in the earlier years started to level off and make investors a little bit nervous because the projections were off. So I think that franchising makes a lot of sense to a lot of those kinds of brands now for a growth model.
Yeah, you just said something extremely important, is, in these capital raises, the money runs out and there's no revenue coming in to support that backbone. But, in franchises, that revenue comes from, having a business that's thriving and running, and new franchisees that then, have some skin in the game, so to speak, to make each of those individual locations operate. And, Holly, I know you have extensive experience with this, with traditional franchises that have done similar things, Jack in the Box and places of that nature, where they are large franchises, but there's small little groups that may be carved out that are underperforming locations or overperforming, and going through this COVID is exposing either those weaknesses or those strengths. And so one of the opportunities I think we're going to see, and I wanted to shift gears into that, is the same opportunities that we see in traditional franchises may come into the CBD and cannabis space, where there's going to be some consolidation, or people are going to want to sell, what they have or what they built up. And, larger groups are going to come in and clean it all up and rebrand. Do you anticipate that, Holly? What's your predictions?
Yeah. I think that there's a huge opportunity there, and we're kind of paying attention to it right now. We've had two businesses come to us to sell very, very, very large cannabis businesses that would, catch some attention, we'll say. It's definitely a market right now where you're going to see a lot of flux and transition. You're correct. In the traditional market, Zarian is dealing with a lot of that as well. When you look at a franchise system, though, I'm going to go back to what you said. Item 20 of attrition. A franchise does not want to lose franchisees and not be able to replace them by a resale. So there is a very important element in that the operational support on the back end is funded. So I want to go back to that real quickly. And in doing that, the franchisor, when they franchise their business with us, for example, let's say you, Cawfee, wants to franchise. So you would come to the table and we would, you'd pay us a fee, a flat fee. And for that fee, you're going to have the top attorney in the country who franchised Five Guys, Sbarro's, has done 2,000 concepts. You're going to have a branding team that were Procter & Gamble executives, that award-winning strategists internationally. And you're going to have an operations team that's done Panda Express, Miracle Ear, what else, Haagen-Dazs. You will have the cream of the crop. So they know the business, they know the industry. And franchising is so new in the cannabis space that we brought the A team in and then the legal team across the country. So every state has legal representation that work with us to make sure that they're done properly, right? Because you can't cross state lines. So there's a lot of elements to this when we franchise a cannabis concept. CBD, of course, much easier. So the operation.
Let me stop you there real quick. So in cannabis, so we have retail stores, we have products or brands, we have services. So what else can be franchised? So a retail store. So if you have obviously, because they're doing retail stores, but what other types of businesses can be franchised in cannabis?
Yeah, anything can be franchised in cannabis. Anything that you have that can be replicated.
Events? Good events? Like events?
An event, yeah, we have. It's so funny that you said that. We have an event company that was trying to work with us and partner with us as owners. We chose not to do that, not because they weren't a great company, but it was diverting us more than we wanted to divert by being a partner in that company. But yes, you can franchise, because you think if you have a concept that other people want, that they're excited for, that could be grown. If you can do your events in any state, why not have a representative in each of those states, right? So absolutely, franchise stamp all the way through. I really do want to hit that operations thing, though.
Okay.
It's critical that operations manual is done well. So if they breach that contract, the franchisees, you can take back that unit and resell that. You don't want that to happen. You want to set them up the right way, but you definitely have a revenue stream, 6, 8, 10% in royalties that can not only, supply your whole entire organization, but feed those franchises all of the information and growth that they need individually.
Also, there's a difference there. When you have corporate stores, there's a middle management layer, obviously. They do regionally, they control a region. They're on salary, they're effective, but they care about as much as you would care if you had a salary paycheck about 5 o'clock when it's time to go home. And when you're the actual business owner, that isn't how it is. You know this very well, Tom, as a business owner yourself. You're doing your grand opening and COVID began. You're going to make sure things happen because it's your baby. That's what a franchisee acts like. And when you have an entire network, we had an entire network of franchisees, and it was like family, good and bad. Everybody's in it like to win it, and nobody's competing with each other because you own your territory. I don't do any business in it, and I own my territory, and you don't do any business in it. And so everything that works for me, I can tell you about, and there's only good in it for all of us because we want this brand lifted. So there's a really strong support network. And I noticed when we were working with portfolio sellers and buyers, private equity would buy portfolios of franchise territories, major regions. And one of them was one of the largest, I don't know if I can talk about who the brand is, but everybody knows who the brand is. And they wanted to convert from corporate stores to franchise stores because statistically, they were getting 25% higher revenue on a franchise-owned location as they were in a corporate store, and it's because of what I'm talking about. So in the cannabis, since it's wide open, what you start out with is master rights. Master rights can be over 60 territories, and that's a regional owner. That's like your middle management. And they get a piece of the royalties of the franchise territories under them in their region. And for that piece, they manage them to be successful there. And so there's a lot of skin in the game in multiple layers. And you can come in, at first and have one territory, and then get 3 territories, and then get 5 territories, and then have master rights. Or you can come right in at the master rights level and open a location that has 60 territories under it and start selling the territories as you work your store, and you get a lot of support. There's no one who cares less for you than they do for themselves when it comes to that sort of a growth model. It's a self-sustaining sort of a model.
Yeah, as you mentioned that, it just brings to mind, the franchises that are around our business right here. We have a Cleaners that just became a franchise that's here. We have Smoothie King. We have Cold Stone Creamery. We have Chick-fil-A, but they're all owned by local people that live right in this town. And the guy that has Cold Stone, he operates 5 of them. The guy that has Smoothie King, he has 3. The Cleaners, that guy has 5 of them. So, in the future, we think cannabis when we're thinking, dispensaries like Trulieve or Rise or Grow Healthy here in Florida. But in the future, a lot of the businesses that are out there may be cannabis themed or CBD themed, but something even different than just a retail store. Or, we're seeing brands blow up across the country like Cookies from Burner. He has stores, he's got, products, he's got everything. And, I heard he was offered $800 million and he turned it down, because his expansion. So, there's a difference. A lot of people confuse franchising with licensing.
Right.
So we're seeing a lot of expansion with licensing deals recently, but, more is going to come around in franchising. And what I'm hearing is that people that have great brands and great products can do it. So basically they would sign up with you guys, and then they could go through this whole process. And if they have a really good duplicatable system, they could franchise their own brand, product, or retail store by using Cannabis 10X, correct?
Yeah, that's right, Tom. And I want to say what you're talking about right now is critical. We are in a timeline that is very short. That people that are doing licensing, they're already getting sued. And here's why. You can't control the brand when you sell a license. You can't control what they do, how they do it. They're actually licensing the right to use your logo, basically. I'm paraphrasing that a little bit for publicity.
And we saw businesses that grew too fast implode, like Women Grow, for instance.
Right.
I mean, they grew too fast and they couldn't control their chapters and they imploded.
Right. And so when we're going in there and we're looking at a business, we want to franchise that business because we don't have all of the difficulties with a license. Because people that go in there and say, "Hey, licensing is the best way for your business," is doing those individuals a disservice, because they're not going to strengthen the brand, and it's a totally different concept. They're very separated legally. They are. In a franchise, they gather together every year for annual conventions. I mean, for whatever that's worth, it really inspires people to be the best they can be, and they're at that convention or cruise or whatever with everybody like them. It's doing the exact same thing. It's exciting for them. They can share secrets and grow their business, and they become lifelong friends. Yeah. Fraternity, right?
You know what? Imagine going into a Baskin Robbins, and every time you went into one in a different area, you're like, this is nothing like the other one was.
That's what happened with these brands early on. I worked with Jane's Brew and House of Jane, and when Ben was initially licensing that out to other states, yeah, it was great because they got a license fee in the beginning and an agreement to pay fees. But, you know, when we started examining what was really happening, licensees in certain states, yes, they licensed that brand and they produced it, but then eventually they produced a competing brand of their own that was either better and cheaper, and they sold that instead of the brand that they licensed. So a lot of these licensed brands early on experienced, you know, the block of their business as opposed to the growth of their business.
Right. And if you have product, the best distribution channel is your own network of owners. Think about that. How many people and clients come to us and say, I just want to get my stuff on the shelf. Okay, well, this is what you have to pay. Here's the marketing group. Here's their success fees, yada, yada, yada. Oh, but wait, you have 100 franchises, you introduce a new product, it's out there. So
yeah, you got the buying power of the mass, you know. So is that another thing that a franchisor has as a revenue source, that they're able to curate the products or produce the products and make some revenue on those
profit centers? Heck yeah, Jason, you can elaborate on that more.
Yeah, Jason.
Yeah, sure. You can so you can swing that around, and you get we would have preferred clients, so preferred products, preferred pricing, and preferred partners, basically, we call it that. So they would be you know, everything from hotels, you know, and travel, where you do your events. You know, when you swing around a lot of people like that, that almost anybody will negotiate to the extent that they never would have otherwise. So you get economies of scale, basically. You have a network of owners that all want to get lower rates on some particular thing that all of them are going to be doing, and you're going to pull your business from some vendor. Well, they're going to change their rates so that you don't go. And if you offer that somewhere else, someone who has, you know, pricing at some you know, competitive rate in the open market is no longer going to stick to that rate. They'll say, you know, it doesn't make any sense economically not to. And so we had a whole barter book. There's you know, barter networks where you're getting barter dollars, you know, and a lot of different companies, it's pretty common. You put yourself in a barter network, and you're trading basically services for services. So you can go in there and get 200 hotel rooms for you know, in exchange for whatever it is that you do. In our case, we had advertising. You're trading advertising for anything. And that's an easy one to trade. But you know, same with this, right? So your wholesale products for CBD, a lot of the distribution that they're doing there is you're getting a location for extremely cheap, and they're doing that because they're not making any money up front. They're making all their money on the distribution of their products, and you're selling their products through your location. So they just want as many locations as quickly as possible so you sell their products. And that's one model that you can go with.
And that's why, you know, just to stop you there, that's why American Shaman and your CBD store, you can only get their products in their stores. There's no other offerings, correct?
Correct. Yeah. And I think there's going to be many other models to come. Obviously, GNC, you know, is an example of an herbal shop or a vitamin shop. Like the vitamin shop, another example. I think that's gonna start coming out there in the CBD world.
There's a mix. They have their own brand, you know, just like the white label at Publix, you know, so the GNC model, they'll have their own brand, but they'll also be carrying a curated list of competitor brands, so to speak, which is best for the consumer.
That's exactly right. So the distribution channel in itself is of value, but then you're going to watch them, each of their franchisees have $1 million, $2 million in revenue coming in that they're getting, you know, 10% royalties on. That marketing fee that we talked about, that's not even tax deductible. It has to be used on the franchisees. So it goes in an escrow account. So there's so many advantages, but the intangible element of creating something of value with everybody on the same page, wanting to do this and increasing the market share so rapidly without the huge capital investment. I don't want to say this exactly like this, but almost anybody can do that. If you have a good brand, almost anybody can make themselves a super brand. This is not what people think. They think that they need to raise money to grow their business. I'm telling you that that's not true, and I've seen it happen over and over again. So we encourage owners out there that have two dispensaries and want to grow and don't see the light at the end of the tunnel. They don't know how they're going to get to that next raise. Maybe 3, maybe 4. Have them call us, Tom. We'll help them. It does cost money. Obviously it's a service, right? We pay each of our vendors and all of the rest, but that service, we have seen it happen with 2 franchises sold. They've recouped all of their costs, and that's at a lower franchise. So if you have a really high end franchise that's selling our services around $100,000, depending on what we do. So you sell 1 unit and you've recouped on some of these. So, and then of course you sell 12 and you just made another $1 million in franchise fees, not to mention everything else. So to me, it's a no-brainer. We'd like to help people.
I think even in the cannabis space, there's a lot of issues on your supply chain. If you're going to go in there and you've never been in a cannabis space, a lot of it kind of paints a picture of if you're a solid franchise buyer, a lot of the time you look kind of like this persona-wise. You probably have corporate background. You're intelligent. You're educated. You maybe have 20 years experience, and you have some money, and you want to try the entrepreneur route, but it's risky, and you could lose it all. That's very possible. That's very true. And so it's an intelligent move to get a system that already exists and step right into it. And you're basically running systems and processes the way that you were for your corporate position. And especially, let's say if you're if you're managing Starbucks stores, you're a perfect retail franchise master rights owner. You could if you're running a dozen or 200 stores, you can move right over and run a dozen or 200 stores. And it's a widget, it's a similar thing. And what you sidestep there in the cannabis space at this point is a lot of the difficulties in your supply chain. So your wholesale costs, those can vary you. When the costs go up and down, they fluctuate in the wholesale market. It's not like they don't stay the same all the time. And if you move locations, your city regulations change, and even in the same state. And then if you want to grow out of one state, it's completely different. You only have a handful of states you can even do the same concept in. While if you're in a franchise network, it's almost like you're a beehive, and there's no way that you can go out there like a single bee and do as well. It's just not possible. So I think it's a really advantageous system, and it's almost like this is a once in 100 years, once in 200 years. I think that the luck that we're in this sort of position where a new industry is actually born in a world that's this evolved, like this established, or a country that's this established, a brand new industry with no infrastructure is unheard of. You don't get that kind of growth. Like the amount of growth that you'd see in an established industry, if you see 1%, that's pretty big. You see 10%, that's newsworthy. And if you see 30%, that's an emerging market. And that's like something comes out in fitness, like Orange Theory and fitness. That was big. But this is way bigger than that. It didn't even exist. Yeah.
So that really brings me to this question, is too big, too fast a problem? What should people expect if, a small guy maybe has one CBD store right now? Let's use George Martirano as an example. So George in Philadelphia, he has Hip Hemp Cafe. He has people looking at it, and we're not talking about investing right now, but he has people looking to expand his model within the state of Pennsylvania. Okay, and he wants to open up 500 locations. Is that too ambitious in this space, or is it to look at, well, let's do 5 or let's do 10, or what should somebody that really hasn't expect? Should they look at it as, I want to have 500 locations, or is 40 or 50, territories or franchisees a more manageable operation?
Right. Well, you want 400 or 500, and you can get to 400 or 500, but to do it immediately, there's 3 reasons why you wouldn't want to do that. Number 1 is you're not 100% sure yet what that perfect owner looks like. So you create a persona, you start selling it, and you get 12 locations out there. Maybe year 2, you get another 24. So maybe you have 36 locations in your first 2 years. you're really going to be able to see what the results are, how well this person is working in the business. Maybe you need more of a salesperson that's an executive. Maybe you need somebody who's more analytical to be an owner in this space. Maybe you just need somebody with passion, and I'm minimizing the criteria that we go through to help build the persona for our franchise owners. But you have to look at that model then at 1 to 2 years and see what's successful, what's not. If you put 500 in your first year, you can destroy your brand with a blink of the eye. You don't want to do that. So that's the first reason. The second reason is operational support. So if you're growing this business and you're barely understanding really what that replicable model is, well, one of our people come in and their team and they build the operations. They're not still 100% sure. It's going to take some time to put the clothes on and to feel what that feels like. And so they'll be hiring people and training them and getting them ready, but it's going to take a little bit of time. It's going to take some growing pains, if you will. So we would say in those first 2 years, be very careful about your growth. Make sure you have enough that your brand is growing, because that, of course, attracts more people. And then, of course, the third thing is the franchise owner has to be happy. If they're not happy, they're not going to validate, and you'll never sell another territory. So you really want to make sure that you're doing it right from the get-go, and then there's no stopping you at that point.
And you brought up something, because when there is something that explodes real quick, like Orange Theory and like cannabis, we see things pop up really fast, like physician office franchises. There, that's a good example. And where they probably, and I don't want to mention any names, but some of them grew so fast and they didn't bring the highest quality physicians on board to those locations, and now they're experiencing problems from the franchisees, so to speak, not just here in Florida, in other states where they did grow too fast and they didn't provide the support. And some of those deals are there's a lot of backlash right now. Have you guys seen that?
Yeah, and you're going to see a lot of lawsuits. That's the reason specifically why we use Harold. I won't go into his last name yet, but you can know him. He's brilliant, and he's got a team with one of the top franchise attorney companies in the entire world. So you're not going to have those problems by doing it this way. We're going to make sure that everything is buttoned up. And you know what? With that being said, we're not just protecting the franchisor, we're protecting the franchisee as well. So that you want, as a franchisee coming in, to know that this is a system that's sustainable, that will grow.
Yeah, there was a process we would go through.
For a second. What was that, Jason?
I was going to say there's a process that we would go through when we were looking for concepts in franchising. Me and my brother Zach, when we worked in our family business franchise, and then made the exit, we looked at so many franchise brands and had an extremely rigorous process of evaluating a good concept and differentiating it from a bad concept, because they all present well on the front. So validation, like she was mentioning, is a critical step. Some don't even think to do that, which is beyond me. I don't know how that doesn't even enter their mind. But you call a franchisee. Are they making good money? Or do they sound like they're happy doing what they're doing? Are they trying to? Sometimes you'll even find that the franchisees are still swallowing that line, and they'll tell you things that it's still coming. Like they're still expecting it, and it's 2 years later. It's still going to get there, and it's like, what? It's like, I don't know. So if your franchisees are getting the support from you that they, and that the revenue is what they expected coming in, then you're going to know immediately. You call a handful of them and you're going to know. And there's some very established brands, but that's not the case. I mean, brands that you would not think this of, and I don't want to smear reputations, but everybody knows their names, that you call a few franchisees and ask around, and they're like, I'm making less money than I was at my corporate job, and I have to do this work that's work, and I have to work longer hours. Like, it can be bad. So you don't want that kind of validation, right? That's why the growth rate is what you think.
So, that brings me to the other part. We just talked about all the good from franchising. Let's talk about some of the negative. Let's talk about some of the problems that are out there, because there's a lot of people that are trying to franchise on their own. I met a guy recently who had somebody that wanted to franchise his concept, so he did all the legal paperwork, and then the person that was going to franchise it just decided to copy his concept and not go down the franchise route anyway. And then we're seeing when you sell the franchise to a franchisee, is that something that you guys help with? I don't want to get too deep into that, but that's something that, Cannabis 10X helps with, is onboarding new franchisees to the franchisors. When they sell them on it, there's certain things that are being told, or representations.
Yeah, PRs, financial performance representations.
Representation covered in, the legal documents for closing on this. And if those weren't explained, there's a risk that there could be a lawsuit down the road that backfires on the franchisor. So, that's one of the, negatives that I see right away, is if I tried to do franchising on my own, I could run into issues. What issues do people have in franchising that they cover this?
Right. We see that as well. Is it me? I'm on a computer.
It's Jason.
It's Jason.
Hold on.
Hi, Jay.
It's you, Jason.
It is Jason.
It's
I'll
Jason.
ask a question while you're getting him going for everyone. So yeah, we get a lot of people come through, and they've got some difficulties. They want to sell, and they're not selling. Why aren't you selling? Well, how did you build this? What does the model look like? So we can go and assess that. We have a network of brokers that will assist us. Jason, I don't personally sell anymore ourselves, but our brokers will. They'll take that concept. We train them very well. We give them a 2-minute drill. We give them one-sheeters. We give them a video. There's a landing page on the website. They already know how to sell franchises in the first place, but we again educate them on the specific business. They're heavily rewarded for selling those, so there is an incentive for them to do it, which is where the rub comes. Okay, there are some franchise brokers out there that will charge $25,000. We never go over 20. We don't think that there's a number, 25,000 at a base, and they'll go up to 40, 50, etc. And so what happens is they're selling a bill of goods. They'll breach item 19 FPR, and we saw massive lawsuits have happened. I love kickboxing. There's several locations in the franchise space that have went through that because of FPRs, financial performance representations.
What's that? What is that? What is it? What is that?
Yeah. So item 19 of the FTD, it states exactly what the financial performance of the business can be. Okay. It's not a forecast. It basically says that our units do this much work and they put this much on their bottom line. And whatever's in item 19, you can say, because that has been stamped federally and proven. Anything outside of that box, and you breach, and you can destroy people's lives. I won't talk about what the company is, but what happened on the resale end is all of these gentlemen came to me to resell their business, their franchises. They went belly up because of an inaccurate build out cost, an inaccurate working capital estimation, lies on the FPR, actual blatant lies that the franchisor had given the brokers to sell, and they got themselves in a sling, ended up having to declare bankruptcy and all of the rest. So doing it right is critical, and it does cost money to do it right. And I don't apologize for that, because if you want something done well and you want to drive a Mercedes-Benz or a nice German engineered car and not have it break down, then go to the freaking manufacturer and they're the dealer and buy a new one and get the right thing out, and that it's going to be taken care of. It's just, to me, a no-brainer on this, especially when it's your business, your life, your career, and all of your money and assets tied up into this.
Yeah, it's amazing that there's such a great opportunity, but people want to cut corners, and they want to take chances and they want to take risks. And you really don't have to do that if you just take your time. you know, and I think that that's what, you know, we really haven't even talked about COVID and being under quarantine. It's kind of wild. This whole morning, we haven't seen each other in person because
I know.
we used to meet for brunch on Sundays over at Armature, and you know, now it's like we're all sequestered, and you know, people are sitting home. And you know, I know we talked earlier this week about, you know, what's going to come after COVID for investors, and there's going to be opportunities, you know, and unfortunately there's going to be some people that are going to have to sell because of the financial hardship that has been put on them. And there's going to be some angels that are going to be able to come in and take advantage of those opportunities by either, you know, investing back into those companies. What I hope that happens is they don't just crush them and take their assets, that investors see these great opportunities and come in and pump some money into the people that are suffering as a result of, you know, unfortunate, you know, circumstances. So, you know, I don't want to see, you know, these small restaurants that had great followings to be bought for assets and new people come in. I'd love to see investors come in and pump money into those. And, you know, I really wish on the federal level, they would start doing something like allowing investors to invest into funds that had that as a purpose, you know, because I think there's a lot of people.
I think we've got somebody. We have a distressed fund already that's looking for those sorts of assets. You nailed it. We want to assist people to exit with grace. The reason I formed Zarian way back when was because, remember what I told you, I got on the resale of that one unit. Well, I got that on multiple. And what was happening in the franchise space, and still is that franchisors don't pay a lot of attention to the exits. They just want to get them sold. So they'll sell them for anything just so their number on item 20 doesn't dip, right? Well, we didn't think that was right. So we started taking them in and personally signing exclusive agreements with these franchises and resold their business for the multiples that they should be getting that was fair to both buyer and seller. And the same goes in this space. We're going to see that shakedown, and we want to assist people to make sure that they're treated fairly. And when they're distressed, nevertheless, they need to know they still have an asset. They still have a business. They still have usually a license, et cetera, and we can help them.
You know, that's good. I want to get, you know, some advice out there to those people, because like I was talking to somebody the other day that they're like, I've owned this restaurant for 35 years. I put my whole life into it. You know what? It's time to just hang up my shingle. You know, shut down and leave. But there is still some value left instead of just walking away. You know, they do have an asset. They do have a brand. You know, and we don't have to see some iconic places shut down. But, you know, some of these places, they're iconic because of the entrepreneur, of the person behind there that's there every single day that builds the value there. You know, so there is opportunity. So people can also buy or sell their company with 10x. You know, I was just on your website. I wanted, if you don't mind, I wanted to pull it up real quick.
Sure.
Yeah. So here.
You know, so we do have those distressed asset funds. You know, you could call them a vulture fund. They're coming to us as well, like she was mentioning, looking for distressed assets. And what I see in the franchising world happening is that they're, like Holly mentioned, the FTD item 20. Every year they have to refile that FTD to get the accurate numbers for the previous year. And if this year, because of COVID, they break them up into quartiles or thirds. So if your bottom third performers or your bottom quartile of bad performers just got completely devastated, which is 100% happening, before the end of the year, they're going to want to get that off the book. So I think that we're going to see a flood of that happening. I think we're going to sell a lot of franchise units, and I think that they're going to want to pivot into an industry that's pandemic resistant. And that would, there's a few options there. I think some of the funds that are coming to us that they tilted the capital raises that we were working on. They actually tilted their investments over to, you know, the essential businesses. So they put a lot of money over into that, and cannabis actually went up. So that's one of them.
So yeah, is there like drive-through businesses you were telling me?
Yeah, drive-through. Yeah, Holly, I can tell you about. I don't know if you want to tell them what happened. The offers for drive-through franchises were selling in Zarian.
Well, you guys told me about
Oh
last.
my! I've never seen bidding go up that high.
I had an offer at asking price, and then immediately after another offer that went higher, and then we ended up the offer was 800,000 over valuation and ask. So it was a phenomenal bidding war that happened, and something you don't always expect, but is good when it happens. We do something else for clients. I want to just really quickly, I know we're running out of time, but we do 3 things at 10X. Okay. We expand.
I'll be right back.
Okay.
I'm good.
Should I keep talking?
Yeah.
We expand people's businesses. We help them to grow. So we take them from infancy through to mature companies. So we help them find distribution channels. We help them to acquire the assets needed, et cetera. So whether that be cashless ATMs or subscriptions, et cetera, for their company, we can do all of that. So in the expansion, we help them grow through capital raises, those little onesie-twosie distribution and business growth aspects, and through franchising. The second area that we do is with buyers. So we work with buyers and investors to create portfolios of assets that can run through the entire supply chain. And we can work with buyers to help them find the right business or concept that they really are looking for. And so buyers and investors, expansion, and the third, of course, is exit strategies. We're working with one of the largest CBD companies right now, developing a 2-year exit strategy that is critical, that you grow and you position before you sell. We reverse engineer it. I want 48 million. I want 70 million. Okay, let's go work backwards and see how that's going to happen. So those are the 3 areas that we focus on, Tom.
Fantastic. Well, everybody, you can find information on them at cannabis10x.com. I know that we only had an hour today, and to me, it's fascinating. I was a licensee of a brand for pretty much majority of my telecom industry, and I love licensing. I always wanted to know more about franchising because it fascinates me how these businesses, whether it's restaurants, pop up and they're everywhere. Whether it's Sky Jump or Chuck E. Cheese or Chick-fil-A, they pop up, and before you know it, every town that you go in, it used to be you would go to different towns and things would be different. Now everywhere you go, there's repetitiveness, and it gives people that confidence, and that's what people look for. Is they're looking for confidence. They're still looking for mom and pop places, little places as well. But, to be able to duplicate that experience. And I know that's, one of the things that Lisa wants to do with what we're doing over here at Chill Cawfee is create an experience, and then be able to duplicate it. And it may take a while to be able to do that with what she has, but you never know. From what I'm hearing, there's opportunities to do it fairly quickly if you have a good product and a good brand and a good system and a good team to help you do it. So basically, if you guys have any questions about that, you can find them at cannabis10x.com. You're both on Facebook, and whether you're looking to buy or sell your business or get involved in franchising. And I know I met you guys on the expo circuit, speaking in front of crowds. And right now with COVID, we're all trapped to being home. And I'm sure after this is all over, we're going to have some nice little get-togethers and kind of bring some of the companies together. I had an opportunity to see some of the companies that you guys are looking at on your webpage there. They're up there, and they're pretty interesting. So I think we're going to start seeing some new brands and new franchises in 2021 and 2022. So thank you guys for being here this morning, and let's check in again next week if you guys got some time.
Sure. Thanks, Tom.
All right. Bye now.
Bye, guys.